Hi, here are 5 things that I look for before I invest in a company. Number 1, is this company in the right place at the right time? Is there a large tailwind in the form of a megatrend that's behind this company? I believe companies that are working on the right problems at the right time can keep growing for longer because they can keep expanding their total addressable market. Here are 2 examples. Example number 1. 2010 and 2011 was a perfect time to be building anything related to smartphones. This could be smartphones themselves, this could be smartphone applications, smartphone accessories, and more. Smartphone penetration in 2010 and 2011 was growing year over year very quickly, and it was fairly obvious that this trend would continue. Companies that were working on anything related to smartphones in 2010 would have had a decade of growth through 2020, by which time many more people were using smartphones and they were using them much more often throughout the day. Example number 2. In 2024, I think it is a great time to be building anything related to autonomous attritable weapon systems, such as cruise missiles, unmanned fighter jets, unmanned fighter ships, submersibles, you name it. This is for the following reasons. So, reason number 1, the war in Ukraine, I think, has demonstrated just how effective swarms of attritable weapon systems can be. We've seen these systems take out bridges, tanks, ships, and much more. So they're very, very effective. Number 2, advancements in AI mean these weapon systems can probably be deployed in swarms and can make tactical decisions independently, which increases the diversity of missions they can support. Number 3, China is getting closer and closer to conventional and nuclear parity, militarily speaking, with the United States. I think this increases the likelihood of a Taiwan invasion because it increases the probability of success from a Chinese point of view. If war were to break out between the United States and China, I do think this will be a war of high attrition in terms of both personnel and equipment. And in this war, if we do want to save American lives, especially to counter the large number of troops and equipment that China will have, I think we will need to utilize these autonomous and attritable weapon systems as much as possible. Palantir and Anduril today are making it possible to build and deploy, not only build and deploy, but manage these attritable and autonomous weapon systems at a scale that has never been done before, and at a scale that, frankly, I think is needed if war ever were to break out between the United States and China. Palantir and Anduril, from my point of view, are working on exactly the right problems at the right time, and I think both these companies will be highly relevant through the next decade. Number 2, is this company the best at what it does? Do they have a strong and sustainable competitive advantage that almost guarantees profits for years and years to come? In other words, is this company a monopoly, or can it become a monopoly in the future? Monopolies may sometimes stifle innovation for an industry, but I think they make for fantastic investments. Some examples of monopolies that I think are monopolies are NVIDIA with AI GPUs and Google with search. Each of these companies, I think, has no effective competition, and they can probably increase their prices whenever they want without seeing a matching drop in demand. I think monopolies make for great investments because without effective competition, you can be sure of high profit margins for years to come, and all of the money that you make can then be freely invested into research and development for big, bold new bets for your company. Number 3, do I understand what this company does? If I don't understand what a company does and the price drops, then I get nervous. Does the market know something I don't? Have I misjudged? Should I sell now? All sorts of negative questions and panic starts happening. However, if I do understand what a company does and the price drops, it's a very different story. The type of questions that are in my head are like, this is great, when should I buy more? How can I get more exposure? What's the right price point? It's a very different mindset. And so for me, making sure that I understand what a company does prevents me from panic selling at a loss. This played out in 2024 when I panic sold Amprius. This is a battery technology company that builds silicon anode batteries. So the price dropped soon after I bought. I didn't understand the silicon anode battery space well enough, and I thought I was missing something, and I ended up panic selling at a loss. And shortly after, the stock went right back up to the original price. Inversely, Another example, when Nvidia dropped down from $130 to 100, I doubled down because I understood the GPU, AI GPU space pretty well, and I could see the story sort of play out around me and all my friends in tech. I doubled down and I got a lot more exposure, and I made a bunch of money when the price of Nvidia rose back up to its original value. Number four, is this company growing fast? I like to invest in fast-growing companies for two reasons. Reason number one, I think fast-growing companies have the potential for the highest returns, all else being equal. And so I like to invest in companies that are growing at least 25% a year and above. Reason number two, so assuming I invest at a reasonable price and at a reasonable valuation multiple, if after I invest, the price of the company drops or the stock goes sideways for a while, because of how fast the company is growing and making progress, the price in 1 year should be an even better deal than the price it is today, assuming that the price drops or goes sideways for a year. So for me, from this perspective, fast growth acts as a risk mitigation measure, assuming the company's story doesn't change. Number five, is this company reasonably priced? The cheaper the company is in terms of its price relative to its cash flows and net assets, the lower my risk in investing. So as mentioned previously, when I invest, I want to be in a position where if the stock price doesn't move for a whole year, I should be burning to buy more, given how good a deal the company would be in 1 year's time. The situation I don't want to be in is, hey, maybe if the company grows at 40% a year for 5 years, it'll be cheap in 5 years' time. I think you are taking on a lot of valuation risk between now and 5 years' time. And if the company's story changes and its future growth projections reduce, the valuation of the company can plummet and you can lose a lot of money very, very quickly as the market adjusts its valuation multiple on the company. So I like to invest in companies that are ideally great deals right now, or at least will be great deals in 1 year's time. And I don't want to wait for them to become great deals in 5 years' time. I think for me, that's too long.